Hello and welcome to our 5th annual Women and Investing Seminar. I'm genuinely thrilled to be here and to have you here, whether you've joined us before or this is your first time. What started in 2021 as a small idea during lockdown, a simple intention to help women feel more confident about their money, has now grown into something bigger and more powerful than we ever imagined. Our Women in Investing Hub has reached tens of thousands of people, and today we've grown into a community of over 13,500 subscribers and counting. But this year feels different because this year, for the first time, we're joining forces with Moneyweb, a move that we hope will take this initiative even wider than our own client base and our subscriber list, and into the hands of more women just like you who are looking for tools, ideas, and support to make smart financial choices with no regrets. That's our theme this year, no regrets. Because when it comes to money, what do we all want? Peace of mind, confidence, choices. We've got a fantastic lineup of speakers, stories, and guidance ahead. If anything sparks a question, please pop it into the Q&A box. We'd love to hear from you, and we'll take it into account when planning our future content. Just a quick housekeeping note, if you experience any tech issues, the good old close and reopen usually works wonders. We'll also be sharing highlights on our Women in Investing Hub, Moneyweb, and our social channels, so don't worry if you miss anything. All right, let's dive in. It is now my absolute pleasure to hand over to our first panel. Dudu, please take it away.
Thank you so much, Koti. And we often say that change is the only constant in life. And as our lives change, so too do our financial needs. From starting your first job to preparing for retirement, each life stage brings new priorities and opportunities to invest with purpose. Now, understanding these shifts is essential to building a long-term financial plan that evolves with you. This session is all about evolution. We'll explore the financial needs and priorities across different life stages, focusing on investing and building long-term financial security. It's a great pleasure to be joined today by two leading voices in financial planning. Together, we'll unpack how to think about your financial journey and what strategies can help you confidently move forward. Thank you very much to both of you ladies, Nonhlanhla Nxele and Elke Brink, for joining us. I think maybe for the purpose of this session, we can start with some definitions, right? Because we are speaking to financial planners and wealth creators. Elke, when we speak about more so coming from Savings Month in July, there's savings, there's investing, there's wealth creation. How should we understand these concepts?
Thank you, Dudu. I think this is an incredibly important topic to touch on, because I think sometimes saving and investing gets confused with one another, where I typically understand that investors sometimes see saving as saving in the bank accounts, where this would typically be more cash-based. Where the moment we really start touching on investing and wealth creation, we start going more technical in terms of certain investment products which hold different benefits. Should it be taxation? Should it be estate planning? And then, of course, also touching on how we invest it. And this becomes very important when we want to touch on wealth creation, where we would typically be investing in different asset classes. So yes, cash would still form a part of this, but we would also include other asset classes as, for example, growth assets. This would refer to equity exposure. And this typically has a higher yield of return compared to cash. So this is where the wealth creation side starts. So it becomes very important to not just see saving as putting something away in your bank account, but actually on a focused approach, starting an investment portfolio that has a strategy to it.
And we're going to be getting into that in more detail in just a few moments. And then, Nonhlanhla, we come to the concept of a financial planner.
Yes.
Help us understand that, and who needs a financial planner?
So in simple terms, everybody needs a financial plan. You know, when you've got money, you've got assets, you need a financial plan. And the most important thing is to know Because it's the same thing as you going to the doctor. There's some doctors that you can connect with, there's some doctors that you cannot connect with. So you must also do a bit of research to say, what kind of a financial planner am I looking for? Because there's different kinds of financial planners out there. And just also to notify you that there is financial planners and certified financial planners that will actually offer you comprehensive financial planning. Actually, the holistic, we're talking budget, we're talking investment, we're talking all the comprehensive financial planning in detail. So you need to know what kind of a financial planner you're looking for, and what is it for exactly in your financial planning journey? Because some can come in at an early stage and be good for the early stage, and as you move on, you might need a different planner for that.
So Elke, we are talking about the evolution of your financial journey, right? And looking at different life stages. Let's start with the first life stage, your 20s to your 30s, your early career. How do we characterize it?
Yeah, I think this is one of the most important phases, because I think if you do a few things right early on, and from the first moment you would essentially start earning an income, you can align your investment portfolio for the rest of your life. And I think some principles will always remain that you start off doing earlier on in life. And as your life expands, as you start earning more, as your family setup becomes more complicated, not necessarily in a negative way, but as you start expanding, this portfolio starts expanding. But I think the moment you start earning an income, I think almost seeing it a little bit as climbing a mountain or running a marathon. It's easier taking small steps and just moving forward than not doing anything at all. So you need to start tax optimization in terms of something like a retirement fund. I think it's very important for any individual to start a type of an emergency fund from day one. And I think with this phase, typically investors sometimes are a bit cash strapped because it's your first income. You potentially don't have a lot of excess cash lying around. So I think it's important to just really plan from day one and rather start doing something than nothing at all. But I think also touching on the advisor choice is that if you make the right choices from the start, it does ensure that you avoid a lot of mistakes later on, from the right vehicles to the right investment strategies, fee structures. I think heading into that from day one.
The right choices from the start. So laying that foundation. So if we're looking at building a house, the foundation has to be firm. Otherwise, everything then crumbles. Nonhlanhla, we got a message from one of our viewers who is essentially saying, I'm the first one in my family to embark on this journey of financial literacy and financial planning, and it can be so overwhelming. And they are in their early career stages. Elke mentioned the number of products that are available. And so what are the kinds of vehicles or products that are relevant for this life stage?
So basically, it's always important to look at a solution instead of a product. So when you look at it as a solution, it becomes a better way of structuring. Then you can build a product to that solution. So as a young person who's just now starting to learn what to do and and where to go with this plan, and being the first one in the family, first of all, I always say, if you're the first one in the family, you've got quite a lot of responsibilities that you're carrying. But in you carrying those responsibilities is for you to communicate boundaries first. Once you've communicated the boundaries first and it is clear where you stand with your family, then it becomes easier when you're now starting to put in your budget, because now you'll know how to factor in the responsibility that you're carrying into the family. And then from there, we then come in to say, fine, what solutions now do you need to make sure that you now, as an early as being 20, what solutions do you put it in? I mean, we're looking at emergency fund, like Elke has mentioned. You're looking at this tax-free savings account that you can look at. There's retirement annuities that you can look at. There is also, if I want to talk about comprehensive financial planning for you as a 20-year-old, I will say, look at your risk planning, look at your health planning, and those are the kind of solutions that you can start looking at. But all of that must be factored into your budget to make sure that you afford it, and you have made sure that there is boundaries in making sure that you can fulfill whatever you need to do from your family support.
Elke, with the work that you do you find that there is enough understanding in terms of budgeting, right? And we hear that word so often. Yeah. Is there a sincere understanding of budgeting, how to draw up a budget, how to follow it, and what to do?
No, definitely not. And I think it's a human thing. I think most people are guilty of actually not having a a guideline, and that I very much experience with the different investors, even if the earnings are there. And I think a lot of us are guilty of not really having a plan in place and prioritizing some things that should not be prioritized. So I think going back to the drawing board, should it be your first income or should you be nearing retirement? It's important to understand what percentage of your income you are spending on housing, what are you spending on transport, what are you actually investing? Because I think there's a very big reason why only roughly 6% of South Africans can retire comfortably. And a big part of that is sometimes a little bit on the investor side as well, in terms of even if you have a perfectly structured portfolio, you're earning proper returns, but you, from a percentage perspective, simply not saving enough, that replacement ratio is going to be difficult at retirement. So we have to take into account that you most probably retire at 65 and you might live to be 100 in today's time. So we need to plan for that. And being female, statistically, we live longer than men. So we also need to plan a little bit differently to that as well. So I think the budgeting thing is very important in terms of making it possible to have X% to save or invest. And there we sometimes need to realign our priorities.
Right, because it is often said that life is too short, but it could also be too long to live miserably, more so financially.
And sorry, probably if I can just come in there, dude. I just want to come in, especially when it comes to the young, I'll call them the young professionals at all times. And then I will say that learn how to learn when it comes to your budgeting. And I say from the young people, they don't want to hear the word budgeting. So then I give it a special one. I say spending plan.
Oh, okay.
And I said probably it's a bit judged up name for them. It's like it sounds much better for them. I say, in your spending plan, what is it? What's happening in that spending plan? Let's go back to your bank statement, because that's where you will see the truth of what is happening. So that. Because somebody will come in and say, no, I can't afford to put 1,000 rand as a debit order for my emergency fund. And I said, why can't you? What is happening in your spending plan? They don't even know what's happening in that spending plan. So learn how to adjust and to do the budget, because that spending plan is your direction and your ticket to be able to invest.
So in your early career stages, in your 20s and your 30s, you are learning, you are planning for the future that 100%. You want to see. So it's this house that can protect you from the rain. So we've got the foundation sorted. Then we get to the 30s and the 40s. Nonhlanhla, explain that life stage to our viewers.
So this is quite a critical life stage. There's so many things happening. Could be a single mom. You're a family, probably building a family, and some are even in a situation whereby they're actually divorced or widowed. So there's just different life stage. In one life stage, there's just different characteristics that you need to look at. So when you are dealing with a client, understand where are they at that point in time, so that you are able then to direct them with the solutions that speaks to their current financial position. And maybe just to give you a quick story, I just recently had a meeting with a client, recently married, 3 children. And he said to me, Noni, the most important thing for me right now is education for my children. And I want them to go to a private school. And I said, okay, let's show you with the present value right now, the school fees for the first child, they're all minors. I'm talking 3, 5, and 6. Right. So I said to him, let me show you how much it's going to be in the present value for you to understand how much more you need to save. And that's where the importance of a financial planner coming in, because now we go deeper and analyzing these numbers for you, so that we can be able to help you to prepare and be able to know how much you need to put in for you to be able to reach that goal. So at that stage, most of the time it's about children. So that is the first thing. Second thing is about, do I have a home for these children? How do I now get to property? Can I afford a property? Does my credit score look good for me to afford this property? And those are the things that you also have to come in as a certified financial planner and say, where are you? How do we help you clean up? How do you fix this so that you can be able to afford this home for them? And lastly is to say, I want to build a legacy. What must I do? What are the small things? And in there, that's where we come in and do your proper estate planning, and we make sure that your estate planning is taken care of.
Nonhlanhla, that reminds me of what a colleague of mine, Simon Brown, always says, that your financial planner is almost like your psychologist as well. It's not just the financial aspect, but they are there to listen to you and tailor your financial needs with your vision. And so, Elke, when we take a look at now you've got a family, now you're trying to build a legacy, you're trying to actually build up your asset portfolio. What then are the different products or some of the vehicles that you can use to achieve those goals?
Yeah, I think this is an interesting life phase because I think, as Nonhlanhla mentioned, I think there's a lot of life events happening in this phase. I think something we spoke on Moneyweb recently about, which falls into this phase, and I almost think the next life phase as well, which I think a lot of investors struggle with, is the sandwich generation as well. So being in a phase where you need to fund your children, should they be smaller or maybe primary or head school or high school, or should it be also funding your parents that they maybe don't have enough provision for retirement, or they have unforeseen additional medical expenses. So you're in a bit of a sensitive financial scenario, but it's also a crucial time to plan for your own financial future. And I think this is a phase that should be planned for very well, because it's easier again once your own children are financially independent. But in this phase, you do have a lot of commitments. I think for any portfolio, and that I think the basics of investment planning are actually not supposed to be overcomplicated. I think you need 2 or 3 different products aside from your health and your risk planning. But from an investment point of view, you need something like a retirement fund where you can optimize taxation, but it's also a brilliant product to address estate planning. You need a more accessible type of product, and I think this is where something like tax-free investments become very fundamental and useful. And then I think that it's important to have some accessible and liquid short-term assets. So should it be for unforeseen expenses? Should it be for a holiday? Should it be for these type of expenses in your life that you're physically planning for? Because that allows that you don't dip into other savings that were there for a different reason. And but also ensuring that you are with a strategy planning for the nice to haves also in life.
Yeah, we can almost imagine it, right? The sandwich generation. So it's your children, it's your parents, then it's you. And we oftentimes then neglect ourselves, right? So what do you say to somebody who puts everybody else first, not just emotionally, but financially? And at the end of it, and you may realize it much later when you're about to retire, that, sheesh, I'm not comfortable.
Yeah, and is that not something I think most women are quite guilty of?
Yeah.
I think it's one of the beautiful aspects of women in the household, but I do think they tend to put themselves last. And I think that's very important when it comes to the financial planning side of it, is to ensure you are also taking care of yourself, not only for your own future and your own retirement, but also planning for the unforeseen events in life. And that is unfortunately a reality. We need to plan for divorce, we need to plan for critical illness and death, and I think all these topics are sometimes a topic that only needs to be discussed once, and you just need to understand very well what planning the household has in place, what we don't have in place, and ensuring you also know what your partner has in place, and are you making provision for the children and for yourself.
Nonhlanhla, also we have viewers coming from different backgrounds, right? So you have someone, you mentioned a retirement fund, someone who is in permanent employment, and someone who is a contractor, or what do we call it these days, a consultant.
Okay.
And so if you are consulting,
Yes.
and if you have a permanent job, there's a big difference in terms of the benefits that you might enjoy. And on the other hand, not so much, more so when we're looking at retirement. So what does a person who perhaps does not have a permanent job and benefits in this life stage, but is looking to actually make sure that their house protects them from the rain, what do they need to do, or what do they need to know?
Okay, so I think with that is that let's also touch on the fact that the people that are also employed, they currently have the pension or provident fund, which is great. But what they do, which also now delay their growth in also contributions, and that's why we're still sitting with the 6% stats that say that those are the people that will retire comfortably, is because whenever you are now permanent, you are starting with the basics, and they give you the basic could be 7% contributions from the employer, and that's it. And people will leave it at that and not actually increase whenever they get salary increases and stuff like that. They don't really go back and look at their employer's contribution and their own contributions to increase, because as an individual you have up to 27.5% of your taxable income to contribute towards your retirement. So you must just not rely on the employer. They can also even top it up or even increase the contributions, just to make sure that they understand. And just to add on again is to say that they must do an analysis to know, to say, when I want to earn so much at the retirement, how much do I need to start putting in now? And that's another way the financial planner comes in to do that for you, which will be the same for someone who's a contractor or just an independent person, or whoever is a consultant, or even business owners. At that point, you don't know how much you need. Probably you need a bit of a guidance. So we look at your structures and to say, how much salary would you need when you retire? Would your debt be paid? Would your business be running? Would you be giving this so much? And then at that time, we then say, fine, you have a retirement annuity of so much, because then when you hit it back to your taxable deductions, are you mixing it, or can you afford to mix it? And that will be the solutions to help with those individual or consultant or business owners.
You mentioned the word tax,
Yeah.
and something goes ding, 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 because we've just come from Savings Month, but coincidentally, that was also the start of the tax season.
Yes.
So does the financial planner also help you with your taxes, or is that separate? How should we understand that?
It could be both. So there are financial planners, probably they're not comfortable in assisting with that. With the tax, probably from the advice perspective, they can be able to advise you to say what you need to have. And there are also certified financial planners or financial planners that are also tax practitioners that can also help you to submit your e-filing. So that you must also check in with your financial planner to say, are they capable to do that? And are they licensed with those different professional bodies to be able to do that on your behalf?
And then, Elke, we come to the next life stage, your 40s and your 50s. How do we characterize, or how should we understand this particular life stage?
I think this is the phase where we're now moving slowly but surely closer to retirement. And I guess in today's time, there's no age you have to retire. I think more and more individuals end up wanting to work longer, or consulting, or just being, I think from an independence point of view, still keeping busy. But if you do want to start downscaling, or do want to plan to retire at 60 or 65, this is typically a time frame you have to focus very well. I think from most careers, this is also the point when you're earning very well. So I think this is a time when you need to optimize a lot in your portfolio and in your planning. As you both just touched on the taxation side of it, I think when it comes to the optimal investment portfolio, I think it's important to know there's a few aspects that ensure for a resilient, successful portfolio. And a big part of it is the structuring of it, different products, how it's invested, so in which asset classes we invest and what returns we are receiving. But taxation is also a very big part of this. So if you optimize your tax picture in your portfolio, not only during your working lifetime, but also planning for retirement, this makes a very big difference. So as a quick example, if you were to save your entire life savings just in a retirement fund, which holds a lot of benefits, but the moment you retire and we convert this product into a living annuity and you start living off it, this is again taxed at the normal pay-as-you-earn scales. So you typically do want to build other type of products in your lifetime, something like a tax-free investment or more liquid type of assets that can ensure a more tax-efficient retirement. So the type of products we plan in this type of time frame is quite important in terms of ensuring you're also planning for what happens after 60 or 65. So I think having the right advisor and the right strategies in place is quite important. And ensuring that you are actually, as you're potentially earning more, increasing your savings, adapting to what you're earning. Should there be bonus structures? Should there be share schemes at your company? Depending on where you work and what your situation is making time to align the strategies.
So we've got the foundation, the walls have been put up, now we're working on the roof and the ceiling, Nonhlanhla, and something unexpected then happens, for instance, in this life stage, be it a health issue, be it, because this is something that you touched on, especially in terms of the different products that you might have that are out there, not that you might have, but the different products that are out there. And so Nonhlanhla, in comes something that is unexpected, you lose a partner. What then happens to you? Do you completely stop with the building? How do you even continue? Where do you even continue?
Sure, and that story is very personal to me because that's what I'm really going through right now, you know. At this point in time, I think the building is standing, but it's actually now on mute you know, because what has happened is that he was also into business, you know, small businesses, challenges, and he had only to realize that some of his policies lapsed and that it was never communicated, you know, and now he has passed away and you're like sitting, you're like, oh, now what? And you now finding yourself now that because now there's certain responsibility that you have to take over, you now have to go tap into those savings or investments that you had, and you now need to start cleaning up again in that situation. So I always, right now with my experience, I'm actually going out and saying, women must actually start having these conversations with their partners to say, where are you at? You know, I know sometimes it's not easy to have these kind of conversations because I will tell you from a Zulu culture man, trust me, when I told them to say, let's have a conversation, it's like, hey, what are you planning? You know?
Right.
So, but what I would like to say is that the good thing that saved me is because I had my own side pocket. That now it's carrying me because I'm also running a business at the same time. And during this period, you are in a mourning period. You don't really function quite well. You know, sometimes you just need some time out.
Yeah.
And now you're like, where are my reserves? And now I'm tapping into that space and to say, this is my bucket. Let it sustain me for now while I'm still dealing with this emotional situation. And I'm just grateful that I did that for myself. It might not be enough at this point in time because now after that making certain adjustments as well. And one thing that people don't realize is to say that when you're linked with providers such as banks, it's important to start calling those people and have a conversation with them, tell them where you are so that you can reassess and say, am I in this position to be able to continue or what can we do? And they come up with solutions for you at that point in time. So having to have an emergency fund, or even if it's just an investment hub where, because I have got different accounts, this is for my daughter, this is for this is for that, in that investment hub. Now, what do you do? Take it now, it's clean. I'm cleaning up now my reserves, but I need to come back. So after this is to say, let me assess now, where do I go? Do I now start putting in again so that I can now revive my situation, so that I can start putting up the roof because now the house is quite empty at this point in time. But it's quite an emotional situation to go through because sometimes even your finances are stuck at a certain degree. Yeah.
And that emergency fund, then, what does it allow you to do more so immediately?
Yeah.
You know, when you get news that something has happened,
Yeah.
from the first person that walks
Yeah.
in, you must make sure there's water, there's
Yes.
juice, there's cakes, there's
Yes.
sandwiches or whatever. So
Yeah.
what does it allow you to then do while you've got all of this
Yeah.
emotionally that's also
Accessibility.
happening? Okay.
Accessibility. Because within 3-4 working days, depending on obviously the portfolios that you have, you can really have access to the money, you know. And I always say that it's good to have the investment and the savings, because the savings will be immediately, you know, and from that immediately that it covers for a couple of days while you're still waiting for the other money to come in. So have a balance of that. Have some money on the savings account to kick in immediately, and then the investment will come in as well in the next couple of days to help you out. So yeah.
Okay. Elke, you mentioned that this is a life phase that is characterized by optimizing your investments. And for somebody who is watching this, are they thinking, okay, so what does optimizing my investments mean? Do I now need to take out another product? Do I reevaluate what I have that is already existing? If you can please break that down for us.
Yeah, I think the advice aspect becomes quite important. And I think what we touched on initially is that maybe when you are starting off your career and you have your first advisor, maybe this won't be the same advisor anymore. When you're really having a more complex structure, you are building wealth, you are most probably in a different phase in your career or in your family, I think it's important to start off with having a suitable advisor and ensuring that this advisor is going to address everything: holistic planning, tax optimization, and ensuring investment strategies are appropriate for your planning. I think revisiting the actual investment strategy, so ensuring your asset allocation is done correctly to ensure that you are achieving above inflation returns, which is important. So I very much agree, savings need to be in place for the shorter term, but anything over and above that immediate emergency savings, you need to ensure that you're exceeding inflation. So that's one of the biggest things we struggle with, I think, in South Africa as well. If you really think of what your medical aid increases with every year, we're not planning for a 3 to 6% inflation. You're planning for a 9 to 10% actually.
Sure.
So the strategy becomes really important. And I think in terms of the quality of advice. I think your fee structures, your underlying portfolios you're investing in, that becomes very important. And I think there I would be sure that I'm aligned with my strategy and with the type of advice I'm receiving as well.
You mentioned inflation, you mentioned fee structures. And so when it comes to costs, what is it that an investor needs to understand?
I think cost is a whole other can of worms, but a very important one. And I think this becomes very important, I think, in the investing space and the advisory space. So in the perfect world, you're paying for holistic advice, and that's what you should be getting. So it should be something that's addressing your entire financial portfolio, not just the investment product, but also estate planning and taxation planning, risk planning. It should be addressing your whole life. It can become quite technical in terms of if you're now looking at the investment strategy, is it active or is it passive? I think investors shouldn't be too caught up in that in terms of if you have a reputable advisor, the returns and the fee structures make sense, but it's something important to understand. We feel from a wealth perspective quite strongly about working with peer wealth platforms, and this essentially means the fee structures are much lower. There are no penalty structures, so you're not tied into any product should you decide to move platforms. So these type of things become very important. I think what I always feel strongly about with investing is that we are in an ever-changing world, so you need to be able to adapt if you want to. So I don't like being in type of products or type of structures that you can't get out of again if you want to. So I think understanding that it's important, and I think if you have an advisor, it's important to understand what are you getting for that fee? What is the service model that you're paying for?
Nonhlanhla, you want to add?
I just want to say, probably just to help out is to, with when you're looking at your investment proposal coming from your financial advisor, it's important to look at your effective annual cost. What does it entail? You know, there's administration fees, there's platform fees, there's advisor fees broken down in there. So you need to know for that duration of the time that you'll be putting in the investment, how much are you going to pay? And that section is the one that gives you the breakdown. So in your investment proposal that you get from your financial, and that's where the transparency of fees come from, because that's where you will find the breakdown of what are the costs that are broken down in that annual effective cost table.
Elke, you mentioned estate planning. Please explain that to our viewers, and when do you start it?
Yeah. So estate planning becomes incredibly important, and I think if you've ever dealt with it in South Africa, you would know that it's not a very efficient process, unfortunately. So the average client that does deal with the winding up of estate, it can be anything between 1 and 7 years. If there's anything that's getting tied up either at the master's office or should there be something that the executor is struggling to unwind. So it becomes important to plan this. But essentially what estate planning comes down to is what happens if you pass away or if your partner passes away. How do you take care of each other and how do you take care of your children? And of course, in certain phases of life, if you would, for example, have children younger than the age of 18, it becomes quite important. So you need to be sure they're going to be well taken care of. From an investment point of view, it can become quite an interesting space because we typically try to see how much of your planning we can take out of your estate so that it never has to go there. And this can be done with using certain investment products, using certain vehicles, and ranging from using a company, using a trust, using retirement products which are excluded from your estate. So having these type of vehicles in place, but also ensuring that there's sufficient life cover if needed, sufficient investing cash essentially to fund the estate duties payable. But you want to be sure that a lot of your assets don't simply go to your estate and get tied up there. So this is, for example, quite relevant with anything completely accessible. Investment or share portfolio or anything that's not structured correctly will essentially go to your estate first. So if you're in a situation where you are dependent on the funds and you have to wait for a year or more, this becomes a problem. So it's important to ensure that the liquidity is there. And interestingly enough, a lot of our very high net worth clients who have large share portfolios fall into this bracket, that they haven't done the proper planning. So you think your family is fine, but they're actually not in terms of the first year or so. So it's important to have that discussion and ensure that the family is all on the same page in terms of what happens next.
That's fascinating, somewhat comforting, but very fascinating. Nonhlanhla, you wanted to add?
Just to probably add, and I think one of the things that people always say that because I have a will, then after I'm done with my estate planning. A will is just a starting point, and everything else has to do with you doing a proper liquidity analysis, like Elke has mentioned. Understand how much it costs you when you die. Unfortunately, it's a sad part, but we have to say it, because there's also a possibility of you paying tax upon your death. So if you don't know where you're sitting at right now, based on your gross estate and situation, then how are you going to make sure that you've got enough liquidity, and using the vehicles that Elke has mentioned as well as part and parcel of the solution for the shortfalls that you may get on the liquidity. And so that's where the financial planner will come in, do the liquidity analysis for you, then be able to structure in a manner that it speaks to the will and the things that you want to deliver for the sake of your loved ones.
It reminds me of what you said a little bit earlier on in terms of leaving a legacy, right? There are conversations that are going to be uncomfortable that need to be had, because those who then come after you, there has to be a difference and a market difference, because you decided to make that difference by starting today and planning, which has been the theme of our conversation as well. Elke, just before we wrap up this live stage, then comes in offshore investors. So you have a portfolio in South Africa and you have a portfolio outside of the country, and different jurisdictions have different laws. And so what is it that an investor needs to understand, or somebody who's potentially looking to invest outside of the country?
Yeah, this is a very important point, because I think more and more, of course, as South Africans, we're speaking about the offshore space. A must for any individual to diversify offshore. You can do so in different ways, but it becomes very technical and very important. And if we can briefly touch on the estate planning concept again, is if not done correctly and structured correctly, you might be defeating what you're trying to achieve. So, for example, I have seen many portfolios where investors move funds offshore, but they don't have the correct structures or planning in place. So meaning if they were to pass away, the funds have to come back. So then you're bringing everything back to South Africa again. So the type of vehicles are important, and understanding that each jurisdiction holds its own set of rules. So you need to ensure that you're planning for that. So as an example, if you have any type of asset in your offshore portfolio that has UK or US registered assets, you automatically open yourself up to their estate planning rules, which is inheritance tax, which it works on a sliding scale, but it can be as high as 40%. Okay. So if not structured correctly, you can open up your portfolio to having 40% offshore and also a local South African tax. So your family is eventually 60% out of tax if they want to access the funds. This can be avoided by using certain vehicles. So ensuring that you're using optimal vehicles in the offshore space that address essentially what we refer to as a wrapper. And we know we're addressing the estate planning laws, but also optimizing your taxation. So if you wanted to make changes to these portfolios, maybe just touching on the will again, it's important to know that if you have offshore assets, you in most scenarios also need a will addressing the offshore assets. Your South African will might not always be applicable to this. So it becomes very important to receive advice once you're moving into the offshore space as well.
What I'm essentially also getting is that there needs to be some sense of taking of responsibility from a personal aspect, where yes, we have our financial planners and we're walking this journey with you, but there's also your own crossing of the T's and dotting of the I's, if you will, that you have to do. So as we wind down the conversation, we look at the 50s and the 60s. So you've got your house, you've got your windows, the landscaping is getting done so that when you're retiring, you can just enjoy that garden very quickly. For us at Nonhlanhla, this life stage, what is it characterized by?
So this life stage, the thing about it is that we might feel that the house is already standing, it's got all the landscape and everything else, but only to find that there's no windows.
Sure.
And when there's no windows, then you don't have a full house, right? And some people actually delay, not because it's by choice, but by situations that they're experiencing. You find people that now it's their retirement age, they need to now let go. But most of the portion that they get is probably their one third, end up going to paying off so that they can be able to buy the windows, they can be able to buy all these things that they need to make sure that the house is standing. So I always say that as you are building, work with the financial plan that will be able to track, so that by the time you get your retirement, you know that your windows are already there, everything is already set up. So that stage is very crucial, because whatever you're accumulating, it must sustain you for a good 15, 20 years after that.
Yeah, and then now comes time for actually, Elke, enjoying the fruit of your labor and even thinking about how to allocate whatever you're going to be leaving behind. Retirement then comes. How should we understand this life stage?
Yeah, I think retirement is a very important phase in terms of not just from a financial point of view, but also from an emotional and a mental point of view to navigate very well. I think a mistake some individuals make is thinking that they have this whole lifetime of working somewhere and they can just step away and just be home the next day and be okay with it. And this phase tends to place a lot of pressure on marriages and on individuals themselves. So I think it's important, firstly, the psychological responsibility in this phase. But yes, then from an investment point of view, very important phase, as whatever you decide to structure needs to last now for many years. There are different products when you head into retirement, but I think it's very important doing your homework very well in terms of which type of products you choose, especially as we head into retirement and you can start choosing, for example, with your retirement fund between a living and a life annuity. Right. If you go the life annuity route, you can never change it again. So things like that is understanding very well what you choose might have implications for many years. So I would very much focus on advice, and even if you gain a few different opinions, that becomes very important.
Okay. As we now officially close the conversation, Nonhlanhla Nxele, is it too late for somebody who is listening to all of this in whatever life stage that you are in and thinking, sure, I'm so far behind. Is there such a thing?
No, because what I always say that it's never too late when you were to go and acknowledge where you are right now and then plan and be able to have somebody that's going to help you plan better, because there's an opportunity to improve. So if you feel that you're late, I think that you end up putting yourself in too much pressure, then you make a lot of mistakes. So this is where I then say come in a situation where I look for that certified financial planner, because money requires a relationship. You know, you must build that relationship so that you can be able to know what to do with your money. Have a financial planner. It's never too late.
Elke Brink, is it too late?
Definitely not. And I think the mindset around making small differences should never be steered away from. I think if we look at the power of compound interest, if you honestly just do a small amount but you do it over a longer period of time, you can make a significant difference. So rather do something than not do anything at all. And get the advice you need.
And as we've heard today, everybody, investing is not just about numbers. It's about confidence, clarity, and knowing what to prioritize at every life stage. In your 20s, the goal is to start. Build the habit, however small. In your 30s and 40s, the goal is to align your money with your values and goals. In your 50s and 60s, the goal is to prepare so that retirement is not a shock, but a new chapter. And in retirement, as we've just heard, the goal is to sustain and live with purpose. Whatever stage you're in, it's never too late to begin or begin again. A big thank you to Elke Brink and Nonhlanhla Nxele for your wonderful insights, and to you, of course, a big thank you to you for being part of this conversation. Let's keep learning, planning, and investing with no regrets.